I'm not angry. I'm just trying to pull something up. This minimize. All right. Let me put the screen share up. Um, if you are raising your hand in the Zoom, I say this every stream, but don't do that. I don't check the questions in the Zoom chat. Use the questions channel in the Discord um for stream related questions. Still more people raising their hand. Okay, now you guys are trolling me. Now you're trolling me. Um, all right. Okay, haha, very funny. Don't raise your hand on the Zoom. It gives me a notification. Yeah, you and 100 other people just raise your hand. So okay. We are gonna go through there's a lot of new positions. So we'll go through like the five I think five, right? New ones from last week. And then the rest will be pretty quick with. We'll just power through them, take a quick glance at all the charts, and then Leo, find a spot, buddy. And then we'll do Q&A after that, as usual. Um, yeah, that sounds like a good plan. That should take us maybe an hour and a half, maybe a little longer than that. We'll figure it out. Um, but that's how we will start. I'm not going to go over like recapping theses because those are written out for a reason. I mean, sometimes I know you guys like to hear my tonality around it. If there's something like I feel that's worth commenting on as far as the thesis goes, um, I'll do that. But I'm not going to like recap the whole explanation of why I bought the stock. That's what the thesis library is for. So, if you want to build conviction or understand why I bought something, um, you can obviously go back and just read the thesis post. I think I've uploaded all of the. Let me just double check. Yeah, I did. I already uploaded all the theses for all the posts from all the new positions from last week. As far as the broader market is concerned, I mean, every time we get red days, I get a million questions about this. So I'm just going to make this explicitly clear to everyone, especially the new traders. I do not dictate my attitude about the market based on a few days of action. Like never. We could be red all week this week, and if the structures don't break, I just won't care. And that's an important thing to realize as a trader or investor, or I mean, it doesn't matter what your style is. That sort of kind of not carefree attitude, but that like even keel sort of attitude is very, very important in markets. If you get like startled because a handful of stocks you own are down 6 or 7% on the day, you're never going to make it in markets. Like I'll repeat that. If you find yourself in a state of panic, or not even in a state of panic, if you find yourself tripping over yourself because even if every stock you own is down 5% on a day, um, you just won't make it. That is something that is very ordinary and normal in markets. You get 10% corrections in the indexes, not in individual stocks, all the time. Like all the time, every year. So if you can't sit through a correction like that, and by the way, for the sort of stocks that we're trading, higher beta stocks, mid cap stocks, those 5 or 10% corrections in the major indexes are sometimes 20 or 30% corrections, sometimes more in individual stocks. If you cannot sit through a drawdown like that, you have no business trading or investing in individual stocks. Period. And some people, it takes them years to realize that. They go into the markets and they start at 18 or 19 years old and they feel like they're on top of the world, a lot of self-confidence, and the first signs of volatility shake them out. And then other people manage themselves through the first few bouts of volatility, and then a really, really bad correction happens. For a lot of new traders who started in COVID, the first time that happened was in 22, and many of them just blew up their entire accounts. And it's not even just new traders. I mean, for those of you that were on X back in 2019 or 2020 during the COVID era, there were a lot of big accounts, these influencers, these people who were preaching to the public, who were like telling people how to trade and how to stock pick, that are nowhere to be found now, right? They might have gone back to their corporate jobs or blown up an account or lost millions of dollars or whatever in 1 year. And they're nowhere to be found, or they're still there on the platform, but they're talking into the void, with no one listening to them because they purported to be able to handle something that they couldn't. And so handling volatility is like the single biggest factor in being successful in markets over everything. Everything. Over your intelligence in stock picking, over your ability to track themes, your ability to analyze companies, all of that, all of it, even if you add all of it up, is less important than your ability to handle volatility. It's just the truth. And the greatest stock pickers of all time, Druckenmiller, Lynch, the greatest traders of all time, even the greatest investors of all time, like Buffett, all say this, that it's more about your stomach than your brains. They all say it. Not one of them, they all say it. Um, so if the greatest of all time are telling you that, you should listen. If you're not going to listen to me, listen to them tell you it because they all preach that. So that's just a little forward on the markets because I know again, every time we get any kind of pullback, I get a million tags from people freaking out. Is the thesis still valid? Are you still in the stock? What's going on? It's down 5%. Why is it down? If that's how you act when you see that sort of action, you're not going to survive. Um, so be mindful of that as we go through things. I'm still a little under the weather. I'm obviously feeling a lot better from where I was last week, but I'm still kind of scratchy and itchy and a little stuffy. So pardon that throughout the stream if I blow my nose or whatever. That might happen. So um, as usual, all the questions should go in the questions channel. Um, and I'll get to them when we get to that Q&A portion. Leo, what are you doing? No. When we get to that Q&A portion, I'll get to those questions. You can put them in there earlier. Try not to like put 500 questions in a row though. Like if you see 20 questions ahead of you in the questions channel, just wait a second because otherwise I end up just scrolling through this like enormous block of questions and I end up missing stuff inevitably. So if you see dozens of questions ahead of yours um, in the questions channel, just take a deep breath. Let me get through the ones that are there, and then you can post another question after that. So anyway, let's get started on this. We'll start with the power infrastructure basket. Like I said, we'll go through the new positions in each basket first, and then we'll go through some of the older ones. Give me a second here, real quick. But find a spot. Find a spot, buddy. Okay. We'll put it there. Hold up here. All right, we'll start with BLDP here, Ballard Power. So we opened this on Friday. I really liked how this acted today. Pulled back with a lot of high beta names this morning. The comps for this name obviously are FCell and Bloom Energy. So you saw FCell today down 17%, right? Minus 16.95% on the day. You're going to expect BLDP to get pressure when that happens, and it did. But this closed down 2% on the day. Okay. Versus again, the peer comp we're looking at, FCell closing down 17%, Bloom Energy closed down 6%, right? That's relative strength in the peer group. That's clear relative strength in the peer group. This name had the dip bought pretty aggressively, fell not all the way to the 21 EMA, but down, fell all the way down here, close to $4 intraday. I think it was down what, 9 or 10% off the open. Again, a million of you tagging me, freaking out, and then wait, closed down what, 2.7% on a day. That was pretty bloody for momentum. So I just want to give you guys some perspective here of what we were looking at. Obviously, I posted these charts, but the reason that I thought this technical setup was so compelling, you can see it really here on the daily. This is daily over a 9-month perspective. You can see exactly what I'm looking at here. You see this horizontal line marking the highs from this previous range here from last November. And we're flipping that range now from resistance to support here. You can see this very easily. You don't need to be a rocket scientist. You don't need to be a chart expert to see this. This is basic textbook flip of support from resistance 101, right? And so you're seeing this here, and you're also seeing a favorable volume profile, obviously, right? More accumulation and distribution here. Same thing back in this previous range, more accumulation and distribution. And then a lot of low volume, noisy price action in between. That's much less meaningful. Now, when we zoom out, we look at this in the monthly. which is where we were looking originally. We're seeing a little bit of a more compelling setup brewing. You can see this moving average pinch that we talk about on a lot of my workshops, one of my favorite setups to hit. We're seeing that now on the monthly chart here with this name, with this relatively flat 200-month moving average sitting above price as a pretty discerning line. Stock spent quite a bit of time below this, managed to reclaim going into the end of last year this moving average cluster, this monthly moving average cluster, consolidated around it, defended it at the lows at this 20-month SMA, and now is pushing back above it, and it has now reclaimed this 50-month for the first time since the stock was $12 back here. So this is really, I think, attractive bottoming structure that we're seeing here on the monthly chart. And it can be a very, very explosive setup. The higher time frame that you're seeing a moving average pinch like this happening, the more explosive it tends to be. So I think that gives me even more excitement about the technical setup that we're dealing with here. Obviously, you can see back in 21 when the stock had its first big run, it made a really big move, right? It came from this $2 to $3 range all the way to $40 in quite a short period of time, from April to the next April. So really within less than a year, it made a 10x move, more than a 10x move, really a 12x move over that period. So we know this name can be explosive. We know it can move when it wants to move. And we know now that there's a reason for it to move, right? With the data center thesis around fuel cells building. And so as you get more and more perspective on this chart, you can see this name spends a lot of time basing and then goes on these parabolic runs. And so that's really what we're trying to play here with Ballard Power. And I think today's daily action, like I mentioned, I think was showing us exactly what we needed to see, where at the lows here, we came down into the highs of this local range, found bidders immediately, recovered, and closed above that 9 EMA. So very, very unconcerning action from Ballard Power today, and really nothing to worry about, at least for now, from a technical perspective on this one. So I continue to feel like this technical structure is totally sound. Okay, let's look at SHLS, another name in our power infrastructure basket we added last week. Now, we've been seeing a lot of strength lately in solar names, right? We flipped the ENPH, same thing here. You can look at this ENPH run coming off. Again, we always talk about these moving average pinches here. I'm going to bring that up a lot. You see the same thing happen here with the ENPH underneath the 200-day, relatively flat 200-day line, 921 curling up, and then you can see this boom, this explosive move from 36 to 50 in just a matter of a few sessions. And you go across the industry here, SEDG, another solar stock setting up, right? FSLR, another stock. I mean, look, beautiful structure here coming above the 200-day, defending it, 921 curling up. You look at the ETF, TAN, same thing, right? Very, very powerful. You saw today, even with the pullback and a lot of momentum names down just 3.6% right into the 9 EMA, right? So what are we seeing? We're seeing the sector setting up. We have a play within the sector, SHLS, which is my favorite name out of these. And it's setting up as well, right? We got this 200-day take. You can even see these red candles before we got in down here, coming back, retesting the 200, and then very, very strong signals of supportive buys on the way up. So very nice earnings report from these guys. I went through their last earnings report in detail. Obviously, I make some references to that in the thesis. I like what I'm seeing here. I think the electric balance of power thesis, the idea of connecting batteries and reserve power to data centers using their technology, I think is an interesting angle. And they mentioned it explicitly on the call. That's what you always like to see. You don't want to just speculate without reason. It's nice when management gives you a nudge in that direction. Same thing goes for Ballard Power, which we just went over, where management is giving you a nod, right? I mean, Ballard Power's CEO explicitly said that. Shoals CEO explicitly said that, right? And I think the big thing that went overlooked with Shoals is in January of this year, the collaboration they did with Microsoft, I think was excellent. I mean, they are essentially proving data center application with a Microsoft data center. That's about as real as it gets, right? That's where you know it's not just fluff and the technology is there. It's not scaled enormously, but the technology is there, and that means the opportunity set is there, and that means the potential for re-rating is there. And the same thing exists for Shoals. So the Shoals, what we're looking for is we're going to expect some chop in these high 10s to 11s range. We saw a little bit of that action today with the pullback. But I think once we get comfortably into this 10 to 11 range, then we're looking for a bigger move here. And you can see that setting up here. Let me get a weekly up. You see that setting up here. We have this 200 week overhead at 1279. The stock hasn't been public for quite that long, right? It's been public only since 2021. So not a ton of price history. When we flip the monthly, you can kind of see what's happening here. And you can see that this stock is now pretty convincingly building a bottom, right? Absolutely tossed from late 23 to early 25. No one gave a shit about this name. And then really in the last 8 to 12 months, it has attempted to and successfully reclaimed this moving average cluster on the monthly chart. And it's building, right? Building a nice higher base here above this local range where the stock was at the lows. So what we're looking for is this name to make a move up to 12.95, $13. You can see that there's a confluence here that exists between the 200 week. Keep in mind, now I'm flipping back. This is the weekly chart. This is the 200 week moving average here. This is the 50-month moving average. 50-month at 12.95, 200 week at 12.79, right? So you can see a little bit of confluence there in the high 12s of a spot to target, right? Would you expect some pressure here when we get up here? Absolutely. You're going to expect, hopefully, a soft rejection or maybe a breakthrough and then a retrace back, something like that. That's what we'd expect in that range. So plenty of room to get there from now. We're sitting in still below $10, but I like this structure a lot. And I like that we're coming up here for the third time to this 10.50 to 11 level. And hopefully this time going to decisively break it. And I think a little bit of a better volume profile here too on the second attempt. So I think this chart looks good on all time frames. Very similarly to Ballard Power. I like you guys know, and this is true with all my picks. If I like it fundamentally and thematically and technically, that's when I buy it. I'm rarely going to go through a stock pick of mine and not like the chart. Now, there's been exceptions to that in the past. One of them was a stock that we bought and sold pretty quickly earlier in the year, which was ITRI. Even going into that trade, I was like, I don't like the chart. It ended up being something that I should have kind of heeded the warning towards when it come to that stock because the quarter that followed up just didn't impress me. And so maybe I should have listened to the chart in the first place. But it's going to be really rare for me to buy anything where I don't like all three pillars, if you will, of the trade. The fundamental pillar, the technical pillar, and the thematic pillar. For me, that's where the most powerful stock picks are produced. All of my best stock picks have come from confluence across all of those factors. And so that's important to keep in mind when we're going through all these names. Okay, AMRC. So another, again, technical setup where I like it on all time frames. The monthly here, you can see this consolidation around the 100-month moving average. This 50-month moving average is coming back to kind of create a little bit of confluence here at this 34 to 35 zone. That's going to be the spot to break and the spot to watch overhead. Struggled with the 100-day a little bit earlier this month, but we have a lot of room left on this monthly candle anyway, right? We still have another 12, 13 days of the month left. So you look at the weekly, same thing happening here, right? So the monthly, we're seeing this moving average pinch, if you will, that I talk about all the time, happening with the 100-month and 50-month simultaneously. And on the weekly, we flip the weekly and we have this gorgeous look with this 200-week moving average right overhead. If we zoom in a little bit, you can see the stacking here, right? That's going on the weekly chart with all of these moving averages clustered here, the 200-week overhead. And again, I think that produces potentially powerful moves. So this is a name that we continue to be in, continue to watch, and continue to look for a break over this 35 spot that could be potentially quite explosive. Now, in the daily, this is, again, exactly the type of action we want to see. When we're breaking over these key spots, We want to see them be defended on the retraces. And that's what's happening even on today's action, right? Again, let's zoom in. Lows of today's candle, right? Came all the way into that 200 day. Where did we close? We closed here above the 9, right? So buyers stepped in to bring this thing back above the 9 where they needed to. And now you're starting to build this wonderful structure here where you're flipping this 200 day from support to resistance. And you can see for months, this acted as very, very clear cut resistance. You can see this attempt here broke down all the way into the lows. And this attempt is really where we broke out, gave a little bit of a shakeout here, and then back above, and now we're fighting for structure again. So I like the way that this is setting up again on all time frames. That $35 break remains key. Now it's not just this 200-week moving average and this 50-month moving average and this 100-month moving average we're looking at. It's also just price, right? You can see here this local range. What are the numbers we're looking at? 34.57 on the highs of this local range, right? We flip back to these weekly and monthly charts. What are you looking at here? 34.71. You think that's a coincidence that this 200 week is sitting at 34.71 and the highs of this local range are at 34.57? No, it's not. That's technical confluence. That's not a coincidence. What do you have here? 34.59. Like 34.59, 34.71. Highs of the local range, 34.57. Coincidence or technical confluence? I think the latter. So we're looking and targeting that area for a break, and then we can see the 40s. And that would be ideal for this thing to potentially run away. And if you look here, you can see that there's a lot more potential than that, right? I mean, there isn't a whole ton of price history up here in these high 40s. So if we can get past 34, $35, this thing can really run away in my view. And that's what we're looking for. So AMRC, I think, again, another good story, not incredibly high margin business, but it's sort of fitting this behind the meter power theme that we're looking to play, and has a lot of deep set relationships with the government when it comes to data centers. And we know that's becoming increasingly important too as an angle as AI becomes more of this national security issue, especially between us and between China. So another great chart in my view, again, on all time frames, just like SHLS, just like BLDP. So those are the three new ones from our power infrastructure basket. Let's go look at, like I said, we'll cover all the new ones first from last week, and then we'll flip back and go through the older positions just for the sake of the fact that I think people probably want to talk about the new stuff first. Okay, FIVN. Totally neglected, right? Left for dead. Stock was $200 back in 2021. Growth slowed a little bit, fell off a cliff. AI software theme thing caught wind early 25, really picked up pace in terms of software selling. Obviously, in the last 6 months, we've seen names get brutalized. But what's happening now near the lows? Well, first of all, this, which, by the way, I think is just absolutely beautiful daily structure. And even today's close, right? Close down 2%. Okay, close right on that 9 EMA, right? Close at 21.13. The 9 EMA sitting at 21.12. Again, coincidence? I don't know. The guys who think TA is astrology would probably tell you that. I don't. Now, on the weekly, you might say, oh, well, look, we got closed the week here. No, the week's not over yet, right? But yeah, on Monday, not an ideal start to the week, but can we get above 21.44 by the end of the week? I think so. Is it necessary? No. You can spend a little bit of time under here, let these weekly moving averages catch up a little bit more. Sure, that's fine. It's not a break of structure. You don't have to break through every major overhead moving average instantly. So week starting off, day one here, we'll see where we end the week on this name. Would it be nice? Would it be ideal to get another close after 2 consecutive red weeks that closed and defended this spot? Would it be nice to get another close above it? Yeah, absolutely. It'd be nice. It'd be ideal. Not necessary, but ideal. Now, what's happening on the monthly? Well, again, signs of bottoming here, right? Look how this 9-month EMA acted, this 9 and 21 EMA cluster. Look how they acted for this price all the way from 50s down to $13, right? There's just really, really poor attempts to reclaim, right? And then what happened? big volume bar, right? And boom, we pop above it, right? That's interesting. That's an interesting dynamic, right? And again, the month's not over here, right? We're 18 months into the month, another 12, 13 days left, right? Let's see how much progress we can make on this monthly chart. Now, if we get a really big move this month or next month, or if we get a big enough move this month, maybe to push us into this 21 EMA, that could be pretty convincing from a structure standpoint, especially going into next month. If you can get a break over that, I mean, you have tons of range, right? Look where this 50-month SMA is sitting. It's sitting at $50, right? It's a $20 stock. So that kind of gives you a perspective on what the range for this thing could be if this bottoming event continues to play out. And the 200 week, again, way overhead. Leo, come here. Um, so if this bottoming event continues to play out, what's up, Bubba? If this bottoming event continues to play out, then we will, I think, see plenty of upside on this name. And I think there's a lot of range for it, and a lot of potential. So yeah, I find this setup to be very, very compelling, especially because of the fact I think the stock is very reasonably valued. And I think they have a very legitimate angle at being a major, major player in the automation of customer service, which is coming very soon, in a big way. And it's going to be one of the first industries, in my view, that is fully automated, because it's easy to do. Call centers for years have been using robotic, really dated robotic automated software, right? I mean, all of you have been on the phone before with a customer service robot. And you guys know how annoying it is. Click one for this. What did you say? Do you need to speak to a representative? It's annoying. It's terrible. And these guys are poised to transform that business with AI because they have the infrastructure in place, they have the relationships in place, they have the network infrastructure in place as well to do so. And they made it pretty clear on their last call that that's the pivot that they are leaning into. Their new CEO from February 2026, I think I got a question about this, in the questions channel maybe last week or something, saying, well, Stock Dog, why did you pick them as a voice AI candidate? They have no voice AI experience. That's just an ignorant statement. Their new CEO is absolutely an AI guy. That's why he was brought on. He's brought on to make this transformation in the business. So is there execution risk here? Obviously, there's always execution risk with any of my theses, but do I think that it's a promising opportunity? Yeah, I do. And so that's why we picked this one up. And again, as I said earlier at the start, if you want to read the full thesis, they're all available in my thesis library if you want to get more perspective on that. And Zach has a great thesis on this one as well, so you can read his, in his channel also. I think I tagged him this weekend, shouting that out as well. So that's 5-9. Again, I really liked the action today. I just really liked the close today. I thought that was a beautiful job of this name providing a lot of intraday range and then just closing perfectly above the 9 EMA. Okay, idea. This is a mystic idea that I tailed that I also liked. Pretty poor action the last couple of days coming into the 50-day here. But when we flip to the weekly structure, we're seeing a little bit of a breakdown too. Now, again, the week has just started. So we can't make a ton of conclusions on these weekly candles that we're seeing pop up because we don't know, you know? Now, what I will say is that if we get a bad close here on the 9, there is obviously, as I always say, risk that you fall to that 21 EMA. That'd be a pretty nasty drawdown. But because of the weighting that I have on this thing, it's sitting at what? A 2% weighting, roughly 2.3% weighting, a little bit lower than that after today. I'm willing to endure that. It's not going to be a portfolio killer for this name to fall down for a little bit for me. So, not great action, like I mentioned these last couple of days. Obviously, the insider selling, Mystic brought that up and mentioned that. Stop it, Leo. Come here, Bobo. And he mentioned the insider selling, and said that it was going to be something that probably drove a little bit of pressure in the stock, and it did today. We saw that name fall into the 50-day here. So you'd like to see it defend the 50-day if you don't want to see more short-term downside. And on a weekly perspective, we'd like to see this thing close above that 9-week EMA to prevent more pressure on this name from a technical standpoint. Monthly chart obviously looks still just fine. And we have nice monthly structure building here. So no real concerns there, no real warning signals there. Again, when we start to see warning signals on the monthly chart, that's when we start to get concerned, right? That's when we start to ask ourselves, is the thesis valid? Did I buy at the right time? But we're not even close to seeing that yet. So that's not a point of worry for us at this time. And we're still, again, got plenty of week left to decide where this weekly candle is going to close for us. All right, so those are the 5 new positions. Quick chart review on those. Again, go read the thesis library if you want to touch on those theses again. Let's power through the other names before we get to questions here. So let's pull up. Let's finish our power infrastructure basket first. So ENS, obviously, this has been maybe our least stressful name. I think I'll give ENS that award. Least stressful name. Outside of this earnings reaction last time, where a lot of you freaked out, where the stock fell from 200 to 150. That was a pretty short-lived decline. Reclaimed 180 within week and a half, and then now we're trading in the 200s. They have earnings coming up this week on the 20th, so watch out for that. Not a company that's growing rapidly. Remember, this is a high optionality play on domestic U.S. batteries. That's what ENS is for us. It's a high optionality, reasonably valued stock, which is rare to find in batteries, by the way, that I think is trading at a very reasonable valuation and also has a ton of optionality for growth across energy storage, across military batteries as well. And so that's our focus with this name. That's why it remains the biggest position in the power infrastructure basket, because I think there's quite a bit of optionality here. And there's quite a bit of ability to grow valuation and see the multiple expand. So I think that that's important. And that's kind of what we're seeing with this name and what's driven this name higher over the last several months for us. And again, been a very relatively stress-free hold on this stock for a while. So that is good to see. All right, we went over BLDP, we went over SHLS, we went over AMRC, PLPC. Name's been acting a bit sloppy lately, consolidating. Like I said, I've become a little less enamored with this name over the last several weeks. I still think it probably goes to 500 over time. Not as excited about it as I was many months ago because of how much price has gone up. Also because of the fact that it's now become shared by a lot of these pumpy accounts on Twitter. That always turns me off. Still a good company, but not really cheap anymore. And they continue to not do the best job, in my view, handling tariff impacts and pressures from that direction. So am I selling it? No. Am I as enamored with it as I used to be? Also no. But the monthly structure looks pretty great still. And I think the overall structure looks pretty good too. So weekly, you look at the weekly here, I mean, has done an excellent job of just defending the 9 EMA, even going back here to the big pullbacks, defending that 21 as well. So structure looks totally fine. I don't think there's any red flags there. Just from a story standpoint, like I mentioned, a little bit less enamored with it than I was several months ago when we bought it under $200. Now almost a $350 stock. Valuation has expanded quite a bit. The business has not expanded in unison. So AMSC, this is one of our most recent ones as well. I think this is just gorgeous on the weekly. Building pretty nice structure here. Moving averages starting to flesh out. Came down, had a pretty ugly day today, but a lot of momentum names did. This is a very high beta name. It did come down below the 21. I won't call this too ugly of a close. Yeah, it's technically below 50, 55. But that could be stick safe pretty quickly on the weekly here. There is room for a little bit more downside. I mean, you could come down and kiss this 9-week EMA. That wouldn't be all too terrible. I think a kiss of this weekly 9 EMA would provide a nice entry for people that maybe missed this one on the initial ramp. It may even be a spot where I potentially upsize it. This is still a pretty small weighting for me. It's sitting at about 1.8%. I think lower than that today after today's drawdown. So we'll see. depending on how it acts. Again, I do not add stocks randomly just because they're red. I think on every red day, I get tags from people like, hey, stock XYZ is down 6%. Why aren't you buying more? If if you ask me those sort of questions, then you're not watching my workshops because that's not when I buy. I don't buy stocks because they're down a certain amount, and I don't sell them because they're up a certain amount. I think that that's silly and arbitrary. I buy and sell stocks at very specific spots on the chart for very specific reasons. And neither of those reasons are the stock is up 100% from my entry. I should start scaling out like these technical traders and setup traders and scalpers say, like, take out 10% of your position when the stock is up 20%. Like, I don't do that stuff. It's arbitrary and I think silly. And like, if you want to pick up pennies in front of a steamroller, go for it. But that's just not how I operate. So I'm looking for stocks, both in terms of price and in terms of fundamental improvement, to accomplish benchmarks and goals and barometers that I set for them. And I base my entries and exits based on those barometers. And my entries and my exits are always, to a degree at least, technically informed. So for a name like this, for example, yes, is this a major breakdown? No. Could this be stick save tomorrow at the 21 EMA? Sure. But for me, an ideal add on this would be a kiss of this 9 week as opposed to looking at anything on the daily structure because this thing has had a history. If you go back here, remember this cluster, you can see it has a history of violating the moving averages pretty willfully. And so I know you have to know the attitude, you have to know the technical attitude, which is why I like to phrase it, of the stock that you're in. Some stocks do a wonderful job on the daily chart of showing fidelity to their moving averages. Other stocks don't. You must recognize the difference. You cannot just black and white everything in trading. And this is another issue I see with a lot of people who are trying to learn from my streams. They say, well, Stock Dog, you buy at the 21 EMA. No. Some stocks I buy at the 21 EMA if they show fidelity to the 21 EMA. Stocks that don't, I don't buy them there. Why would I buy a stock at the 21 EMA if it has a history of constantly violating the 21 EMA? That makes no sense. So everything is conditional. And some of you get frustrated when you ask me questions and you say, well, what's your rule for this? Or what is this A, B, and C? And I say it's case by case. And some of you get frustrated by that answer. That is the answer for most of trading. That is the answer. It is case by case. And so when you're looking at any chart, you should ask yourself, okay, let me look at the stock on all 3 time frames. And let me ask myself a question. Does it show fidelity to the moving averages? If so, on which time frame? And if so, how frequently? And in some cases, you'll say, you know what? On the daily chart, this stock shows no fidelity to any of the moving averages ever. I'm not even going to pay attention to the daily chart. On other stocks, you'll say on the daily, weekly, and monthly, this thing trades very cleanly around the moving averages. Great. That's a name where you should be very technically informed by. And on other charts, you'll say on none of the time frames does this give me any signal. Then you're not even going to pay attention to moving averages on a chart like that. You're going to pay attention to historical support and resistance and just read price. So it is case by case, and it does depend. And you have to do a little bit of work to be able to scroll through a chart, maybe go back 9 months, maybe go back a year, and ask yourself, is there fidelity, right? Is there a tendency for the stock to show fidelity to the moving averages? And if you look at the daily on this name, like look at this cluster. Like, what the hell was this? Like you're just violating the 9 and 21 and then spiking up. Here you do it again, and the stock goes on a rally from 45 to 65 while sitting for 6 sessions underneath the 21 EMA. So you're not going to get signal from those lines on this name, and you have to know that. Now, on rallies, and you can see here on this rally, it does show fidelity, right? But we know during periods of consolidation it doesn't. And what are we in right now? We're in a period of a little bit of consolidation here in this $50 to $60 range. And so while we're in that period of consolidation, we go back to the last area that this consolidated. Even if you want to go back down here, forget about this. Look down here in the most recent area of consolidation. Does this look like fidelity to the moving averages to you? The plain, simple, obvious answer without being a rocket scientist is obviously not, right? There's no stickiness to any of the moving averages here. And yet, this base resulted in what? An explosive move higher in spite of the sloppy daily action. So if you were somebody who looked down here and said, well, this daily action is a mess, I don't want to be in this stock. Well, you just missed out on a stock that doubled in 3 weeks, right? Because this daily structure shook everyone out who was looking at this as a scalp trader or a day trader. And then when you flip to the higher time frames, you ask yourself the same question. Is there fidelity here? And here you see a lot cleaner picture, right? What do you see here? During all this noisy action that we just looked at, look, I'll flip back again, okay? Pay attention to this cluster when I flip back. This top cluster. This is a weekly. This is the daily. Daily, noisy mess. Weekly, what do you see? Great fidelity to the 9 EMA. Like phenomenal, right? And what do I hear down here where we're talking about this being a mess, right? What do you see? Great fidelity to this 100-week. Now, not perfect, but pretty good fidelity to this 100-week moving average. What does it look like down here? It looks like a war zone on the daily, right? Flip to the monthly. Same thing, right? You're going to be able to find spots. This monthly is noisy as hell. And you know, okay, this monthly is not going to give me much signal. So you know this is a chart where you pay attention to the weekly chart. Simple. I hope that breakdown was helpful. If not, go back and listen to it on the recording. But that should give you perspective on how you should pay attention to multiple time frames. And understand where the fidelity is. Is this a stock that shows fidelity on a specific time frame, or is it a stock that shows fidelity to the moving averages on all time frames? Ask yourself that question. And you don't need to ask me. Look at your chart. It shows you right there, right? And it's very, very clear and obvious. You know, it shouldn't be confusing. That shouldn't have been confusing at all, hopefully, to anyone. If what I just went over there was confusing to you, listen to it again when I post the recording, because that should not have been confusing at all. It's very, very clear cut. Okay, AMSC, FPS. All right, this is one where we don't have a lot of price history. We're not going to spend a lot of time on this one technically because there ain't much to see. It's a very, very new IPO. Now, this name I thought had a phenomenal last quarter. It has not acted tremendously well since that gap up, right? This was the earnings gap up, 2 red candles in a row, but also 2 red days in a row for momentum. So you don't blame it on this stock. You blame it on the sell-off in momentum. Another quick lesson there. You never want to look at an individual stock and wonder what's going on with the individual stock if there's momentum as a whole selling off and you're in a momentum stock or you're in a mid-cap stock or you're in a high beta stock. Selling with the group, right? Babies get thrown out with the bathwater. That's what happens in rotations and corrections. So still like this name, have no problems with this name. Again, not a whole lot to lean on in terms of chart structure. We can't look at this stock and say that there's a ton happening technically. But monthly, look, pretty clean, right? Close, opens, nice space, defending the highs. And I mean, again, on the weekly structure, there just isn't much to see here. I wish there was more commentary, but there just isn't much to see here. We need to see more of these moving averages pop up as price progresses over time. On the daily, again, a violation of the 9 today. Could it fall to $40? Absolutely could. You should expect newer IPOs to be more volatile. So yeah, absolutely could fall to 40, but am I saying it definitely will? Who knows? Plenty of week left. And we need to see this build more technical structure before we can be more technically informed by it. For now, this remains mostly a fundamentally informed and thematically informed trade. And once again, quite a small weighting. I mean, AMSC, which we just went over, and this, both sitting at roughly 1.8% weightings. Again, after today's negative action to the downside, they're actually both slightly lower than that as well. Okay, so that's a power infrastructure basket. We covered everything: ENS, BLDP, SHLS, AMRC, PLPC, AMSC, FPS, covered. All right, robotics, Edge AI, OSS, the big dog. All right, acting like a big dog too. So big earnings gap up, 60% to the upside. We caught this, just like we caught this earnings gap up, just like we caught this move from 4 to 8. So we've caught every big move on this stock. We got in under $5 here. And now the stock is $15. Yay! Another multi-bagger. Woohoo! Ahead of the herd. Choo choo. Anyway, this thing's acting like a beast now. Um, Very, very strong post earnings reaction. I mean, this is high and tight consolidation, but it's high and tight consolidation that's actually drifting to the upside. Look at the lows. Look at the wicks on all these candles. Look at the lows. This is like really, really powerful action. So I think institutional interest might have flipped on this stock for the first time ever. This was not an institutionally driven name prior to that last earnings report. And what happened on this last earnings report? Highest volume ever, right? Highest daily volume ever. I'm pretty sure it was highest ever. Yeah, by far, right? I mean, look at this volume bar. Like that is by far the highest volume ever on this earnings gap up that took us 60% higher. So potentially a game changer, potentially the inflection we were looking for. Remember when I first bought this stock, and you can go read my original OSS thesis, by the way, in the thesis library when we bought it at under $5. But when I first bought this stock, this is what I was alluding to, this idea that edge compute, ruggedized compute could become a niche that a very small company like this could dominate. And they're proving that they have the ability to do that. They're penetrating the right verticals, securing the right customers, and developing a lot of momentum. So, yeah, it's nice to see and really good action. And I'm quite impressed, honestly, at the relative strength of this name following a 60% earnings gap up. You'd expect it to give at least a little back, and it has just fiercely defended the highs here in the face of a very volatile market, right? I mean, two very modest red days for this name on a pretty brutal 2-day momentum sell-off. So OSS continued. Leo, what are you barking at, buddy? What's up? What's over there? No one's there. Come here. Sit with me. It's okay. Um, so yeah, acting fantastic. All right, VLN. This name had a nice pullback too, right? Ran all the way to 350. Two pretty decent red days for this guy. Where are we? Sitting on the 9 EMA on the weekly. I mean, sorry, on the daily. Okay. Zero concerns about structure. And look at this. Gorgeous. Wow. Beautiful. Right? Right over the 200 week, wick down, soft retest. I don't even call that a real retest. This 200 week. Great structure. You can see, I mean, look at the volume profile. Are there any sellers on this thing? Look at the size of these sell candles versus the buys. Right? Minuscule. Monthly structure punching through the 50 month. Right? I mean, this thing's got range, man. This thing's got range. So I continue to think that this thing gets treated sort of as a cash-rich meme stock in a way. You know, I think our thesis was largely informed by the idea that these guys have real technology. They have a technology set that's selling at a 62% gross margin. They're the smallest real company that's in the birds of the feather humanoid robotics group, which is being led by juggernauts like NVIDIA, Samsung, MediaTek. I mean, they're on the list. Their CEO said so much to that effect in the last earnings call as well and pumped that relationship. Good for him. I think they should be pumping that relationship because they have a real technology set, right? It's not a company that's just like it's not a shitco. Are they burning cash? Yes, they're burning cash because the scale of their business is larger than they can handle. But they're running a 62% gross margin. They have a real product set. And they're being tapped for the birds of a feather group. Technical structure is gorgeous in all time frames. I'll stay in the stock. You know, is the cash to value situation a little less compelling than it was than when I bought it at 150? Sure, of course. The stock is practically doubled even after this pullback, still up like what, 80% on shares. So is it a little more expensive than it was a couple weeks ago? Sure. Do I think that the daily, weekly, and monthly timeframes are still promising and the story is still promising for the robotics connection? Yes, I do. And so that's what's keeping us in this name, or keeping me in this name, I should say. And really nice defense of the 9 EMA today as well. So that is good to see from VLN. All right, Synaptics and VPG are two new core positions in this basket. So Synaptics today, nice little pullback on this guy, and much needed after a monster rally. And into the 9 EMA, a little bit below it. What's going on in the weekly structure? Well, weekly structure, these moving averages need to catch up a little bit, right? So this name needs a little bit of consolidation here. Maybe we'll provide some nice entries for those who missed it or maybe got shaken out at the lows. But when we first got in this name, what were we targeting? We were saying that this break of this 200-week moving average, for those of you that remember my streams from when we first opened Synaptics earlier in the year, I wanted to see a decisive break of this 200-week moving average, and we've gotten that, right? We've gotten that over the last several weeks. And so this is exactly what we wanted to see. And so this is the thesis playing out from the technical standpoint. Now, what about the monthly? Well, I mean, that is just beautiful. Like salivating, right? This is a salivating monthly chart in my view. Stock puts in a gorgeous 18 days to take all of the moving averages back. And the last time this stock was above all the moving averages, it was a $230, $240 stock, right? That's the last time it was above all the moving averages. So I think wonderful structure here. And if we zoom in even a little bit, like, look at this. Just all of the moving averages stacked right below price. And look at the lower wick of the month. Very pretty. Very pretty. So let's go Synaptics. Very well, it deserves some consolidation here after a move like that. Whenever you have a stock that makes a big move, you should not be mad when it's pulling back or letting the moving averages catch up. That should not make you mad. That should make you happy. That's healthy for structure. And so Synaptics doing what it needs to do in terms of structure defense here. Now, our other newly designated core position, which has doubled for us in a very short period of time. I remember when we got in here at the $53 area, a lot of people were telling me, well, don't you feel like you're chasing it? It's up a lot from the lows. Well, turns out we weren't chasing it. The stock has doubled since in a matter of what, a month and a half for us? Not even a month, really. But a month's time, this name has doubled for us. Most of that move came post earnings here. We went from 65 to 100 plus dollars. Now it's run away. I wanted to upsize this name. It ended up upsizing itself for me by doubling. So that's beautiful to see. And now this name is just off to the races, right? I mean, new highs, parabolic. Would I like to see it cool off? Yes. I never want to see stocks run away that far, that fast. I'd like to see it cool off and consolidate, but it doesn't look like it wants to. This is becoming, I think, the most compelling mid-cap pure play on humanoids. And so that's going to make it really, really tough, I think, to get this thing to meaningfully pull back. They're working with 4, according to the company, humanoid producers. There's a high level of speculation that that includes both Figure and Optimus. We don't know that for sure, but there's a high level of speculation that has been going on for this stock for months that both of those companies are involved. And I think the way this stock has been acting around Figure announcements, you guys saw how well it acted on the day that they posted that live stream, right? I think it's a suggestion from the market that the market is buying that relationship. Now, we don't know for sure, but when the market bids a stock that's associated with a company this aggressively on good news for that other company, it's generally a suggestion that the market's buying into that relationship. Now, is this a cheap stock anymore? No. It's an expensive stock now, right? When we bought it, I thought it was pretty reasonably priced at 53. The fundamental thesis has become less compelling now. Now, why am I not selling? Because the thematic thesis has become more compelling. So I've talked to you guys this a lot before. People ask me, like, when do you sell stocks? I sell stocks when the thesis is broken. But as a stock goes up and grows and executes, the thesis evolves with the company. That's part of the game. You know, when you have a small company, your thesis is very different. You're looking for different things. As the company grows, your benchmarks evolve. And so that's what's happened with this name, is that I think they have executed very well on their thematic relevance. And so that's why I'm staying in the name. Do I think that there's fundamental risk, more fundamental risk today than there was when we bought it? Yes. Do I think technically it looks great? Of course. I mean, it's at new all-time highs. It's very hard to fault a stock that's going to new all-time highs on massive volume in a choppy market. That's hard to fault. And so, yes, on all time frames, it looks very powerful and very relatively strong. We're not gonna be able to look at this chart and say, "Ooh, ugly chart." Is it a bit extended? Sure, it is. Could it use some consolidation and a pullback? Yes, it could. Am I highly expecting it to pull back? No, because I think the level of excitement here has gotten very high, and I think to an extent, deservedly so. So we'll see what happens when those calls come up for expiration. I probably think I'll end up exercising some of them. Um, the Novembers, at least. Probably not the Junes, but who knows? The Novembers, at least, I probably will end up exercising those. So yeah, that's VPG. That's our other core position here. Okay, CTS. And BlackBerry. These are the two small weightings. So CTS, I thought was setting up nicely here. Punched through the 21 EMA today. I was actually watching this today for potential upsize. I didn't love that action. I will look at this weekly structure though and say that this is really pretty. I think this is just really, really nice. Look here, you're on the verge, or not on the verge. You've got a golden cross here, 50 over the 200. That's what golden cross is. 50 is on its way to cross that 100 week as well. We zoom in, we can see this massive cup here, right? And so this is really what we're looking for from a longer term structure standpoint. And if we look at this monthly, you can see the same thing. Monthly action here trying to settle above the highs. And so you can kind of see the cup that we're trying to play here from a technical standpoint. Again, this business, if you go back and read my original thesis, the idea that we're playing here is a pivot away from transportation into robotics. This is true for a lot of our names. Not a lot, but some of our robotics names. Synaptics, VPG, and OSS is in the robotics and edge AI basket because it's robotics plus edge AI. OSS is obviously much more of an edge AI play than a robotics play. But I'd say Synaptics and VPG are more of our direct humanoid relationship plays. And then VLN, CTS, and BlackBerry we'll go over next, are our plays that are trying to pivot away from automotive and transportation into robotics. Now, why is that connection interesting? The bridge between transportation and automotive to robotics. The reason that bridge is interesting is because the tech has a lot of overlap, right? Everything from advanced driver systems where you're taking camera data and feeding it to essentially a robot, a car. A modern car is a robot, right? It's a very important thing to understand conceptually when you're thinking about these things. Those same systems that feed data, whether it's camera data, sensor data, motors, etc., that feed that information to a car are all needed to feed that information to a humanoid robot or an industrial robot or a robot of any kind. And so that's the overlap there. We're looking for a revival and a re-rating in these names as they pivot away from transportation, not necessarily literally pivot away from transportation, although in the case of CTS, that is literally what they're doing, right? We've been tracking over the last few quarters, and this is part of my original thesis, this idea of their transportation segment revenue falling and their industrial and automation revenue increasing. That's the trend that we're playing with this name in particular. And in the case of the others, in the case of BlackBerry and VLN, it is more of a narrative and thematic inflection that we're looking for, where things like the QNX platform in BlackBerry's case becomes re-rated, and in VLN's case, their chipset, which is used in advanced vehicles, gets more associated with the birds of a feather humanoid program and their other robotics initiatives. So you can kind of see the logic tree there, if you will. So yeah, not a great daily candle today. We want to see action settle out here. Weekly still looks perfectly fine. And as long as the stock defends this 55.81 spot into a weekly close, I think the weekly structure remains very promising. All right, BlackBerry, very, very strong day today for this name. relative to the other momentum names. Looks like it wants to break out of this range. I think if the broader market had been stronger today, I think you would have seen a pretty monster move on this thing. I think you probably would have seen it up 6 or 7%. In a stronger, broader market backdrop. I mean, this is a hell of a chart. This is just like a nice chart. And massive base here, right? Multi-year base. This thing is trying to poke its way out. Really, really pretty structure. We flipped that weekly. We can see here, right? This 200-week moving average was resistance for a long time. The stock now flipped it from resistance to support and really just took off from there. And now you have all of these weekly moving averages below price, all curling up to the upside. That's kind of exactly what you want to see. And we flip to this monthly. You're seeing penetration of this 100-month moving average on the monthly. And you can see that this has been a pretty critical line, right? It was all the way up here back then. Pretty critical line. Stock spent some time above it back here in 2021 during the meme stock rallies. Spent some time above here and then got kind of tossed. And then this rally, I think, is much more quality informed than the meme stock rally was when this thing was just running with GME and AMC back in 2021. That was less interesting to me than the story now. And so we're poking above this 100-month moving average for the first time in a while. First time since 21. All of the other monthly moving averages below, except for this 200-month, which is overhead at 1320, quite a bit above price. And so when you have a stock that falls off a cliff like this, and all the moving averages are these big bellowing whales, right, way above price, you generally don't have a shot for that stock to put in a real bottom until the moving averages come all the way back down into price. And you can see it took them years, right? It took years for this monthly 100 SMA to come down, intersect with price, and then finally for price to flip that 100 SMA here, which is what we've seen in the first 18 days of this month. So extremely powerful technical setup on BlackBerry. Another stock that isn't cheap. So there's fundamental risk that remains. The business isn't growing very fast. It's the QNX platform in particular that we're focused on with this name. And so that's where we want to see momentum, and that's where we want to see a re-rating. All right, so that covers robotics and edge AI. That covers power infrastructure. Let's go over the data center basket now. All right, so our largest position across the whole portfolio is obviously in the data center basket, which is Viavi. Now we've been in this name since $13. My cost basis ended up being a little higher than that because I exercised $14 calls, so my cost basis jumped as a consequence of that. But this name acted really good today. We saw a lot of weakness in photonics-related names. Obviously, this is an indirectly photonics-related name as well because of their optical infrastructure testing. Defended the 21 EMA gorgeously. Nothing to be concerned about on any time frame. This has been one of the most powerful stocks in the market. Tons of relative strength. I think still a great story. I think still a very reasonable valuation. The monthly chart does need some consolidation. I think in an ideal world, you'd see this thing consolidate for several weeks, several days, maybe even a month or so. I don't know if we'll get that, depending on how hot or cold the market is. That'll probably dictate that over time, but nothing to be worried about with Viavi. Once again, if you want to read the original thesis, all those theses are available in the thesis library. All right, Nebius. Very powerful name recently. This is basically a 10-bagger for us now. I mean, 9-bagger. When it was up here at 233, it was pretty close. My cost basis is 23.92. So at 239, this would be a 10-bagger for us. No plans on selling. I went over in my journal this weekend. A lot of people were asking me last week when I posted the update, like, why is Nebius still only a 4% weighting? I don't get it. As crazy as it sounds, even though the stock is 10x since last May, it has underperformed the portfolio. The portfolio is 16x. So that's why the weighting is what it is. It's the same reason why Tesla and Amazon used to be 10% weightings in the portfolio or 8 or 9% weightings and are now less than 1%. I didn't sell any. They just didn't perform the way that the other stocks did, right? When I have a basket of SMID caps that are doubling, tripling, quadrupling, just keeping pace with the market isn't enough. You're going to get tossed in terms of weighting in the portfolio because the stocks just can't keep up. And a lot of times this will happen. This happened with PLPC as well, right? Where it just can't keep up because there's no options. And Nebius has options. I just don't own them. And so Nebius, in spite of, PLPC doubled, Nebius 10x, and neither of them have been able to get above 5% weighting in the portfolio at any time because they don't have options complements. And a lot of my other positions do. And when you have options attached to the position, the weighting will climb much more rapidly. So Nebius looks great. Again, no signs of panic on any time frame, no breakdowns in structure on any time frame. So absolutely nothing to be concerned about with this one. All right, GDYN. It's one of our more recent ones. I think 2 weeks ago, right? We opened this one, so very recent. Doing what it needs to do here. Building structure, right? Gave a little spooky drop here. At the lows, touch the 50, close above the 21. Last two candles bring us back above the 9. Looks like we're going to get another retest of this 100-day overhead. Stock remains ridiculously cheap in my view. 300 million of cash, 550 million market cap, tons of AI adoption runway in front of us. Very talented engineering services team that's fetching a 35% gross margin on their work. I like it. I continue to like the stock. So weighting fell a little bit last week because of the consolidation. Portfolio had a big week last week, and this name consolidated. So weighting fell a little bit, but I haven't sold any and don't plan to sell any. What we want to see is this monthly chart start to give us signs of bottoming. So a reclaim of 775, not necessarily this month, but ideally over at least the next 2 months. A close over that 775 area will be meaningful. And this week, we'd like to see a capture here. And again, I'm talking about what's ideal, not necessary. You shouldn't sell the stock if it fails to capture the 21-week EMA, but we would like to see that. Into the end of this week or maybe next week, a recapture of that 21-week EMA on GDYN. So let's next go to P here. Really, really nice structure here, building on the weekly. I believe monthly looks about the same. Yeah. Really pretty look here. And on the daily, with this pullback. So again, big gap. On the earnings, pull back into the 21 EMA. No concern at all here with what this looks like. Structurally, knife through the 9 today. Sold off with a lot of other memory names, memory-related names. Coming into the 21 EMA. Again, defending that 200-day breakout, so remains totally in play and intact in my view from a technical standpoint. All right, BDC. Always really funny how the lowest weighted positions get the most questions, but this one gets a lot of questions. I don't know why, but it does. They announced acquisition on their earnings, gap down. I liked the acquisition. Markets don't like acquisitions. They're almost always going to toss the stock. Coming into 104 here, this is the spot where I'd like to see a bottom. Obviously, we have some technical structural support here outside of the moving averages. On the weekly, again, looks like it could potentially fall to 97 on the weekly. Monthly, same thing. That 95 to 97 range is where you should look for as sort of an absolute bottom, a do or die spot. I hope it's not necessary to go back and retest that, but it might be. I'm already in a decent drawdown on this name, but I will probably hold through that. I think the stock is very, very cheap currently where it's trading at. Even with that acquisition on the table, I think it's still pretty compelling value relative to peers. So would I like to see a turnaround here? Yes, I would ideally like to see a turnaround here, but as always, I'm objective with my viewpoints on these things. And you could see continued pressure into that 95 to 97 area. That is on the table if it does not pull off a reversal this week. So be mindful of that. All right, telecom and voice AI. We went over 5.9 already at the start. RDCM, this name's acted well. Um, Consolidating really beautifully. You can see even today defended that 21 EMA. They have earnings tomorrow morning. If I don't comment on the earnings within the first 5 minutes, please do not assume that I don't like them. I wait till I listen to the call to comment on the earnings. Same thing happened with VLN. A bunch of people were like, "Oh my God, Stock Talk didn't say anything. You must not like the earnings." I was listening to the call, and then when the call ended, I said I liked it, and the stock like closed up 10%, and a bunch of you sold in pre-market for minus 11%. Like, don't be an idiot. Just because I'm not saying anything right away doesn't mean I don't like it. I like to wait till I listen to the call so I can give a real opinion on the stock. But anyway, nice consolidation after this gap up, high and tight. Um, and we're going into earnings report tomorrow morning. I expect it to be good. Obviously, I expect every earnings that my companies report to be good, but they aren't all good. So I will be honest either way and objective about it if I feel differently. But I think this remains a pretty compelling valuation. I think there's a reason why activists are involved with this stock, because I think there's a ton of shareholder value to be potentially unlocked. And if you can get the right team behind them, I think that that's on the table. So RDCM acting well. All right, Lumen. Um, Great move last week. Um, Again, no concerns on the structure here, right? Like this isn't a breakdown candle, just a nice little pullback, soft pressure here, sitting above the 921 still. They aren't, it isn't, price isn't too far removed from these moving averages that you would expect a further pullback. If you look at the weekly structure, just wonderful consolidation again on that time frame. Monthly as well. The monthly is, I think, really gorgeous on this name. Just beautiful, right? Like you can see here, multiple attempts to break out. I think that breakout will happen. If you can break over 11 here on this 200 month, you have a path to a lot more upside. Look at the volume profile on this name for many, many months going into this year. Boring, no one cared. Last July, you started to see interest. Name popped up into the tens, has been defending the moving averages ever since. And this volume profile is much more attractive than it has been for the last 15 years. Much more interesting. This to me is a sign of interest, right? If you scroll out 20 years, you see the moving, you see like the volume candle here, but you can see it clearer here on the bottom. Much more interesting, this action of the last 15 years. And if you look at the overall cluster of volume here, you can see much more accumulation than you have seen at any consistent point in the last 15 years. So a real inflection, real turnaround story here, that continues to act well for us and continues to look good on all time frames. All right. CXDO. I mean, gorgeous, right? I mean, beautiful structure. Following that earnings gap, 2, 3 days of follow through, now high and tight consolidation. Look at these lower wicks, right? Lower wicks catching the 9 and then immediately recruiting buyers. When you see this type of action, lower wick coming into the 9 and then the close is much higher, like you have seen on this candle, this candle, this candle, that is suggestive to you of a stock that is being protected at the nearest spot of a pullback. And that is attractive to see. And when we zoom out on this thing, I mean, explosive, very explosive setup. You put up on the weekly, put up on the monthly, it just looks gorgeous, right? This monthly chart, I mean, spectacular. So yeah, I continue to really, really like this name. Every time I look at this name, I feel like I don't have enough size, but I don't know if it's going to give me my ideal ad. I mean, the options that I own are already up like 350% on this thing. I don't know if it's going to give me the spot I'd need to upsize it. Hopefully it will, because I really do want to add more to this, but I'm not going to do it at the 9 EMA, and it seems like it doesn't want to go any lower than 9 EMA. So I may have to wait for a really ugly day in the market to upsize this. But I just don't feel like I have enough size. So we'll see. I'll figure that out when I'll cross that bridge when I come to it. But CXDO looks amazing on all time frames, and daily chart has showed a ton of relative strength. All right, RNG. So the lotto that we had going into earnings didn't work. Pretty simple. Got to size your lottos appropriately. Don't ever take a trade I'm taking into earnings if you're going to full port it or half port it. The amount of tags I got about RNG calls after that earnings tells me that a lot of you upsized that and took way more size than you can afford to lose going into that report. There's a reason on all earnings plays that I say zero or hero. I don't know. I don't know what's going to happen on earnings. Leo, stop it. Come here. I don't know what's going to happen on earnings. So you have to be careful not to size too aggressively on anything going into a report and understand you might lose. And on this one, obviously, those options are pretty cooked. I think they're down. What are they down? I mean, they're cooked. Yeah, they're down like 85%. So if they recover, cool. If they don't, they don't. I'll let it burn. So they still have a shot. Obviously, a month from now, could the stock go from 40 to 50? Sure. So they have a shot to recover some value, but obviously the play was to play earnings, and that did not work very well. Now the weekly chart, I think still looks spectacular for what it's worth. I mean, this looks like really, really good, right? Even today, even this week, like you see how it's defending this 9 week EMA. It's doing a great job of that, right? So if I look at the higher time frames, I really like this thing. I mean, look at this. It's a multi-year base that's breaking out of, you know? I think this thing will have its day. Really. I think this thing will have its day. We just got in maybe a little too early, maybe a week or two too early, even. Maybe even not materially too early, but I think on all time frames, this looks spectacular. I mean, you look at this monthly, right? Just gorgeous. I mean, look at this. Wonderful action. So yeah, I think this is still solid. I will probably re-hit this again when the daily structure can show some more strength. That might be within, I don't know, a couple of days from now if you're going to hold and continue to defend this spot. But yeah, that's why the weighting has fallen so much because obviously it was centered around those June calls, which are very close expiration, and the earnings did not, or the earnings reaction did not go well on this name. All right. What's next? So that's the telecom voice AI basket. We got the data center basket down. All right, Amcor. Let's go to chips. Ugly candle for Amcor today, down 6%. Weekly structure, perfectly fine, right? We've seen this on a lot of names, with a lot of noise on the daily, but the weekly structure showing to be completely fine. And this is another one of those names. Obviously been parabolic, zero plans to sell this thing for me. So, every time Amcor is red, don't ask me if I'm selling. It's not going to happen. I'll be holding this stock for the foreseeable future. Same thing with Viavi. There's a reason those are the two largest weights. Well, actually, OSS is a bigger weighting than Amcor now. Wow. That shows you how good OSS has performed lately. Jeez, I didn't even know that happened. I didn't even remember that. I didn't even recognize that last week when I was making that. Anyway, um, third largest, but yeah, not going anywhere. So let it be weak. It's acted a little weak recently. I'm fine with that. It's made a parabolic move. It's more than tripled from where we bought it. Part of the game to see some pullbacks and some consolidation sometimes. A little bit of a messy consolidation up here. Again, when we flip to the weekly, it becomes a lot less messy, and we can kind of see the structure pretty clearly here. Could you get a pullback back into this high 57 area? Yeah, I could see that. Maybe into the 21 week. I could see that. That wouldn't scare me, wouldn't bother me. And we'd be pretty sound from a structure standpoint. Already went over ADIA. Let's go to the defense basket. IRDM acting beautifully, acted really well today too. Obviously, the SpaceX IPO indicating a much higher open than was expected. I think around 2.3, 2.4 trillion it was tied at this weekend. And now acting pretty well again. So IRDM curling up into the highs wants to break out here, it seems. So that is something to keep an eye on. I mean, look at this. Looks pretty explosive to me. And I think probably destined to head back here to the 55 to $60 range over time. This weekly 200 week breakout looks excellent. The low wicks here, soft retest, didn't even want to come down all the way. Acting really, really strong. And now bleeding into this local range, which to me, again, gives us access up here into the 60s. So, yeah, looks terrific. I mean, look at this weekly structure, right? Gorgeous. Monthly, same thing. Like, looks beautiful. Wow, look at the stacking there you're seeing, right? Wonderful. So, yeah, IRDM continues to look great. Um, Technical structure looks great. As you can see here, sorry, I just got a message. I have to respond to this real quick. Sorry, I had to respond to that. Um, okay, yeah, so this looks great on all time frames. Um, and I think continues probably trend higher. Has right now has the tailwind of a SpaceX IPO that's around the corner that I don't know how it's going to go, but it is giving a tailwind to space stocks in general and is providing a lot of momentum for those names, right? And is giving us perspective really on how valuations should be treated in this sector. Basically, any assets in the space sector, how they should be treated and what the perspective is on those. So that's going to inform these names, going to inform momentum on these names as we go forward. All right, let me pull up. Okay, well, I just pulled that down by accident. Do, 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 do. All right, next one up is HII. All right, HII has been acting very poorly over the last several months, come down a lot. Daily chart does not look good, failing to reclaim the 200-day. Could definitely see more downside with this name, but there is an attempt here happening at the 50-week moving average to defend the stock. If you look at the monthly, coming down to the 221 EMA on the monthly. So this is a spot where you could see a bounce produced, but we do need to see this daily structure repair itself, or otherwise the stock remains sort of in the caution zone, and remains a stock that we should, be careful about until it can reclaim this 200-day decisively. So it kind of remains in no man's land right now. I would say you don't want to take any big swings at HII around this area until it can decisively, once again, defend this 50-week or defend this 21-month EMA here. All right, and the last two we're going to hit on, MITK and LEU. So MITK had a great partnership with FICO last week. That's produced some relative strength. We'd like to see it reclaim the moving averages here behind that story. If we look at the weekly here, you have a 9-week EMA right there overhead, and you have plenty of great structure here that we are approaching where the stock can bleed pretty quickly into the $17 to $20 range if momentum continues. And I think the catalyst that we got with FICO is excellent. I think it's a validation of the distribution rails they have in the financial industry and the additional penetration that's going to happen there. If you read their marketplace listing on FICO Marketplace, it basically says exactly what our original thesis was, which is that there is a tremendous amount of need for multi-platform biometric verification. In other words, documents, video, and voice. And Mattek has that. And so on the FICO platform now in the marketplace, they're presenting it as that multifaceted fraud platform. So I think it gives them an edge on distribution and gives them probably more momentum. All right, LEU. LEU now, again, acting like poop lately. We look at this monthly chart. Still great structure. Now we bled below the 21-month EMA today. I don't think that's a problem as long as into the end of the month we can close above it. Obviously, if we do close below it, that probably means more downside potentially into this 156 area. I don't want to see that happen, but it is a potential on the table if that monthly close fails to hold this 21-month EMA. So that's important to watch for. All right. That took a while, but that's all the positions. It took like an hour and a half. I'll get into a couple of questions here. I'm not going to do questions forever, but we'll do maybe 30 minutes of questions real quick here. So let's see what we have going on the questions channel. All right, I know if the market started to show signs of a big correction, you would start by reducing exposure through options. Can you go through them and which would be the first to trim or close? Laugh my ass off. No, I cannot do that because that's very conditional based on the pricing action that we see at that time. So I'll cross that bridge when I'll come to it as that answer. Adia, does the insider sell change the thesis? Nope. I've mentioned this many times. Insider sells do not dictate anything to me. Insider buys dictate to me, not insider sells. Insiders sell for a million different reasons. Insiders buy for only one reason. What's your take on this? We avoid the ad bubble because of real world constraints on wafers. NVIDIA could double its revenue, but TSM intentionally doesn't want to increase capacity too quickly to avoid a boom and bust scenario. No, I don't think that has anything to do with what you're referring to. I think that that's more of just a TSM being conservative decision. Does it tell you anything when a stock jumps very quickly above all indicators? Do you care if it happens very fast or gradual? I prefer gradual price action. When it happens too fast, stocks get extended quickly. They tend to form parabolic tops. You still hold the idea June calls. I sold them for shares. Yeah, I sold them for shares because I expected some near-term weakness in semiconductors, and we got that today. So I'm glad I sold those June calls for shares. I still have the idea September calls. But yes, like I mentioned in my journal, I did sell the June call for shares, and that ended up being a good decision going into today. I don't have a lot of shares on that. It's about equal weight between the options and shares. It's a very small position anyway. I just started a position in DUOT after the earnings drop. I plan on dropping my DD tomorrow. I feel like it's in your wheelhouse. I only found it based on what I've learned from you. Curious your thoughts on if I've heard of them. Um, I have not. So I can't really give you thoughts, but let's take a peep at the chart. Looks good, man. I don't know what this is, but looks good. Looks really good on all time frames. I don't know what they do though, so I can't give you perspective other than that, but looks good. Any thoughts on Link? I told you I'm not going to answer those questions. I'm not going to answer any thoughts on blank. Ask me specific questions. CRDO, thoughts on levels to add. I don't even know what Link is, by the way. I think you're referring to Chain Link or crypto or something. CRDO, thoughts on levels to add. Let's see. Monthly, weekly, daily. Let's look at the daily. It's really where you should be looking for perspective. I mean, this looks great. This spot looks great. If you want to pick this up, if you can come, I don't know if it'll come all the way into this, but 141 to 143 range, 250-day confluence, that looks good. Any concern with potential interest rate hikes that can wreck mid cap plays? Yeah, it can wreck the whole market, not just mid cap plays. So yeah, you don't want to see hikes. It's a pretty straightforward opinion there. What percent of stocks was I forced to sell or got shaken out of last year? Do you think I track that? That's a ridiculous question. I don't know. You can go find that out yourself. Go through the trade log of all of last year if you want to do that. I don't know what percent of stock I got shaken out of. Um, is there any reason you don't think Noke as an AI infrastructure play is interesting? It's just I don't know, too much hype around it, too many unusual options flows, guys on it, everyone and their mother talking about it. I'm not really like overtly interested in that. AWS is really the leader in contact center software. Okay. I mean, there's AWS is the leader in like 50 different businesses. For software plays like FIVM, there's no concern from your standpoint that Anthropic will keep releasing new modules and will tactic SaaS players. Hard tech and power companies are shielded, but 5N isn't. Yeah, guys, I agree with this idea that AI is coming for software. I think there are a handful of plays in the voice AI space and in the AI fraud and identity space that I think are less susceptible to penetration. And I've explained pretty clearly why, including in the 5-9 thesis, which it seems many of you have not read based on these questions, explaining why I don't think that's the case. If you disagree with me, don't buy the stock. You know, of course, I've entertained these devil's advocate perspectives. I always do that before I buy a stock, but if you're worried about those things and you do not believe my thesis on why they won't happen, then don't buy them. You know, pretty simple. If you disagree with me on that. Do I have ENS options? No. What do you think of RR for Robotics Basket? It is a shitco and a meme stock. If it goes up because of the environment. Is the chart good? Yeah, probably. It's all right. Not great on the daily, but yeah, I mean, weekly looks good. Monthly looks like it wants to do something. I mean, yeah, this is a robotic sentiment play. It's not like a legitimate company. Yeah, NOVT is a legit robotics play. Thoughts on form for photonics testing exposure? Is it technically a good entry point? Let's see. Yeah, it can be. It's at the 50, but it's punching through it. Let's see where the weekly's at. No, Well, weekly failing at the 9, daily failing at the 50-day. You probably have some room to the downside unless it can turn around tomorrow. If it can't turn around tomorrow, you probably look to this 105 spot, maybe 21 week as a better entry on form. How to deal with tickers where not getting options reasonable prices. IV goes up quick. I don't want to own options at double prices, for example. Has been buying equal size shares when options not getting filled. What do you suggest instead? Better options. You can do that. That's fine. I don't know what else I would suggest. It's really the only two options. You either get common shares or equity or both. How do you shortlist a particular stock in the theme? For example, Mobileye also has autonomous tech like BB. How do you tell which one will move? Based on a confluence of technicals, thematic relevance, and fundamentals. That's how I decide that. And also a little bit of management teams mixed in based on which platforms I think are better. I think QNX's platform is superior to Mobileye's platform. They also do different things. Mobileye is more in vision, QNX is more in integration. So you have to understand the nuance behind these things to make those distinctions. Have you looked at OSIS? No. And that looks really terrible. What stock positions have options that are not liquid that you don't list? I don't think there's any others. Pretty sure they're all listed. Yeah, they're all listed. As of last week, I put the illiquid ones on there last week too. I have a couple on AMSC, but that's not meaningful. It's like less than 1% of the position. Um, would like to know this one. How do you shortlist a particular stock in a theme? Oh, yeah, I already talked about that. IDT, yes, I love that chart. I've looked at IDT before. Great chart. They are a telecom player. Their earnings are coming up, I think, on the 27th. But yes, that's a good chart, Razor. Do you believe the market is starting to rotate into software, especially now? Today, it looked like it. Yeah. I saw it now today. How do you measure rarity premium? In other words, how do you determine whether the rarity premium has already been applied by the market or maybe factored in, but only slightly? How do you gauge this with a company you are confident will trade at a ridiculous valuation? I found that when my research leads me to a stock that I believe deserves a rarity premium, the valuation is a bit higher than the earnings would suggest. How do you think about the extent of the premium? That's a very good question. And how do I answer this? For me, at this point, it's instinct. But I think if you want to think about this more procedurally, what you should ask yourself is, what do you think the magnitude of the opportunity is? So if you're looking at a stock that you think has rarity premium, let's say in AI, and you think it's a unique name, and that they're playing a unique role in the AI industry that no one else can play. If you think the magnitude of the opportunity is a multi-hundred billion dollar opportunity, right? And the stock is trading at, I don't know, $2 billion valuation, even if it's expensive, let's say it's trading at a 60 PE, you could justify that away in the longer term modeling of the thematic opportunity, not the fundamental valuation, but the longer term modeling of the thematic opportunity. You can justify that away, right? So the truth is to your question, and it's an excellent question. I don't want to give you a poor answer to an excellent question, Zach, but the truth of your answer is it is depends on the theme that the stock is related to, and it depends on how big the opportunity set within that theme is, in your view. And based on that, you kind of get a subjective gauge. You're not gonna be able to say like a stock should only trade at a 70 PE if they have rarity premium in this particular industry. You can't be that objective with it. Because again, when it comes to uniqueness, which is another word for rarity premium, when it comes to these things, you're thinking about a name that does something very specific, right? For a very specific reason. And you never know how that dynamic is going to change. Like in the case of LEU, for example, a lot of the recent weakness has been attributed to the idea that BWXT is getting into enrichment, right? Now, the reason I stayed confident in LEU's rarity premium is because I believe that BWXT is going to limit that exposure to the defense industry. Now, if that changes, That'll change my perspective on how much market share in the secular opportunity that LEU can win, and that'll change my tolerability for rarity premium with that name. But for now, it remains intact. So it is difficult. The answer to your question is what you're asking is difficult to assess. It comes with experience, and it also comes with just your personal judgment to say, no, I know the stock's expensive, but the opportunity set is so big that I think the absolute valuation is still too low. So I think when you're looking at stocks that play a unique thematic role, you should think less about the multiple and more about the absolute valuation. In other words, what is the market cap versus the overall market opportunity? That is an easier way to get perspective, I think, on that. So great question. There unfortunately isn't a great answer to that question other than what I just said, which is that it's really subjective and based on your own judgment, based on many factors. How do you decide which position should be options only? It's usually a buying power decision, and that's what all the recent options only positions are about. Do you always watch the same moving averages? I don't even know if you paid attention to the first half of the workshop. I went over all of that. What is the key thing you're expecting from the RDCM call tomorrow? I am expecting them to show momentum in their business and better usage of the capital available to them. Those are the two things I'm looking for. I'm also looking for hopefully some activist pressure, which isn't going to show up in the earnings call, but some activist pressure pushing them in the right direction as far as governance, use of funds, and addressing the AI opportunity. I want to hear a lot of AI mentions on the call, or at least some suggestions that they're looking to take advantage of that opportunity. Do you usually write options at expiration if they stay in the money? Yes. Not always, but yes, generally. Given the robotics theme, ALNT put out a white paper around humanoid robots, but hasn't mentioned anything else around humanoids. Is this pullback to the 200 SMA? Yes, I think ALNT is a quality humanoid name. The problem is the last earnings reaction went badly, again, because they are not marketing the opportunity well. And they weren't aggressive enough about it on the call. So the last earnings call did not go particularly well because of that. I still have like 100 Lumen calls. Do I wait for Lumen to go back up again, or do I just take the profit? Whatever you want to do. What do you mean by parabolic top? I don't think I've heard you say that term before. It means when a stock's very extended and goes up very fast and then crashes back down to the moving averages. That's what that means. I've been fascinated with what we call crossover trades. The market is slow to recognize a company pivoting into a strong theme. The new segment is small, typical to the legacy business, but growing rapidly. You seem to find these opportunities often. My question is, I'm sure this case by case, how do you try to find these companies within a theme that are transitioning? The market is sleeping on a thematically relevant vertical. Research, man. I mean, that's the answer to that question. How do I find those opportunities? I mean, that's a very general, like that's too generic of a question. You can be maybe a little bit more specific, maybe about a particular company, but um, yeah, whatever you're calling crossover trades or whatever is, yeah, that's my MO. I find companies that have a business segment that's growing faster than other business segments. All right, we're gonna do a couple more questions here. I'll run this till 10:30. So for another 9 minutes, we'll get however many I can get through. For FIVN, from a risk management perspective, how would you handle this post-earnings gap up sitting under the 21 EMA? If it fails the 21 EMA, do you see a chance for it to flip the gap, kiss the 100 SMA, or do you lean on conviction and largely ignore the gap fill? I mean, you've been in this price territory already. People abuse the term gap. I mean, you've been through this price territory already, right? Like where this gap happened, you were just in this price territory. So you like when people say all gaps fill, like could price come back down here and fill this gap? Sure, but you were just here in that range. So it's not necessary. I think people misunderstand gap filling. Like you don't look at a chart like this and say, well, this gap has to be filled. You spent weeks in that gap. So yeah, I just don't understand that. I don't understand why that's for such a frequent question. Um, can you review Ouster? Yeah, great pullback for that name today. Right into the 21 EMA. Sorry, right in the 9 EMA. Perfect pullback. Low wick came close to 21 and then closed at the highs above. How do you define a structure breakdown for a stock? Failure of the stock's existing underlying support systems. I mean, I don't think I don't know how to answer that. I don't know what underlying support systems are, but you need to learn how to read a chart if that's your question. What is your view on VSH? Does it have robotics play like VPG? No, they're very different companies, and I don't know VSH well enough to give you a perspective on that. Uber financials have made a very strong acceleration. The chart's looking like a bottom. Options IVs in the 30 to 40% range. Sure, I'll look at the chart. Yeah, could be attempting to form a bottom here. I'm not overtly excited about Uber because I think their platform premium probably wanes. But yeah, we could argue the weekly and daily are attempting to form a bottom here. I've noticed on some new, wait, hold on, I skipped a couple there. Looking for OSS, would you suggest entering at the 9 EMA or wait for a bigger pullback? Thanks. I wouldn't suggest anything. That's your decision. The higher up you enter and the more liberal you are with your entry, the more risk there is. That's how it works. So if you want to enter the 9 EMA, you have to know that there's realistic chance for a pullback to the 21. If you're willing to take that risk, do it. Set a stop at the 9 EMA. Simple answer. I don't have a crystal ball, so any possibility on re-entering CRML? No. I've noticed some new positions you have chosen, two different expiration dates. Would it be reasonable to go further out of the money for more contracts or best to play the same strikes as you? That's up to you, champ. Have you looked at Zebra? No, not really. Is there any particular reason why you prefer to do mid swings? How do you feel about leaps? Depends if the stock has leaps, depends on the durability of the thesis. Yes, I've looked at TE. I'm not that interested. I know that everyone's freaking out because of Leopold buying it. How comfortable am I with the concentration, lack of diversification in QSS growth around specific defense and medical wins? Small companies like that are going to be lumpy. Their main business is compute and defense, so I'm not particularly surprised by that. I discussed the software AI risks to 5.9 in the original thesis, so you should read the original thesis. Where do you post your options play when you're taking new positions in options? The same place I post everything else in my journal. Yeah, do I think the thesis on T is good? Yeah. One of my really good friends, and SPAC and Pan Man on Twitter, who's a phenomenal trader, really smart guy. He's been all over that name for many months before Leopold. So yeah, it's a good play. It's not for me. What signals do you look for to inform how you adjust and lean into thematic weightings in your portfolio? How do you quantify those signals so confidently? For example, how did you get the feeling that you should allocate more capital to Edge AI versus telecom? I didn't get the feeling that I should allocate to Edge AI versus telecom. Telecom was a new basket, so I allocated to both of those actually at the same time. So I don't understand that question. That's a misunderstanding of what I did. I upsized the Edge AI basket because I felt like robotic supply chains were going to start getting attention in the middle and end of this year. And I was right about that with Synaptics and VPG, and with OSS as well. But the voice AI basket was also a new basket. So I had a tremendous amount of confidence that that was going to get noticed too, which is why it's one of my newer baskets. So the idea that I replaced or prioritized robotics over telecom and voice AI is just not true. So I think that's a misunderstanding. Yeah, Galaxy, I'm not going to answer that question because that's a silly question. That depends on your personal risk tolerance. I'm not going to tell you when you should or shouldn't sell something that you're down on. If you're down on something, you decide when to sell. I can't coach you on that because I don't know how much that money means to you. I don't know what your portfolio size is. I don't know how many contracts you have. I don't know how meaningful that amount of money is to you. I can't answer those things. So I don't know. You typically end up keeping up with solar names, or was there another path to SHLS in your research? Yeah, I was researching BESS solutions. Yes, I was. But it started with power management. That's where I started. Um, and that's was kind of the tip of the iceberg. And then I got all the way down to solar. A lot of solar names started popping up in my research. And then SHLS with electric balance of system um, was kind of where I settled. Can I review FPS? Yes, I did already. Reviewed the chart earlier in the workshop. Watch the recording when I post it. Um, let's see here. You're not interested in a stock of the size of Sony and the 50% share of CMOS chip. I have not read much about the Sony story, but I do know it has acted well. The stock's really like gappy and kind of crazy, and again, too big of a market cap for me to look at. Remember, I only buy stocks if I think they can double. That's like a pretty hard rule of mine. I want stocks that have the ability to go parabolic. Okay, well, let's see here. Yeah, Galaxy, again, that's another silly question. It's not, I'm never going to tell you if something is a buy or sell in your personal portfolio. That's up to you. That stuff is all up to you. What this service is about is me teaching you how I think about stocks and what I do. So I tell you exactly what I do. I'm buying this, I'm selling this, options on this, equity on this. Here's my thesis. And then on the workshops, the streams, I give you perspective on how I think. Then you make the decisions for your portfolio. I don't tell you, hey, Galaxy, sell this. Yeah, you should sell that. Or hey, Zach, you should sell this. Or hey, you know, I can't give you guys personal advice on your personal portfolios. That would be crazy. There's thousands of members in here. I would lose my mind, right? So it's okay to be a little bit independent and do a little bit of stuff on your own. It's okay. Who's going to win the NBA championship this year? I mean, the obvious answer is OKC, but I think the Spurs have a shot. They're probably the only team that could beat them, I think. Can you please share thoughts about differentiating the components of humanoid robots? I mean, dude, we'd have to do a whole workshop on that. That's a big question. And we're already at the 10:30 mark. So you can read some of my original research on VPG, on CTS. You'll kind of get a perspective on that. But that question you asked is way too broad. There's a lot of good research out there that you can look into. All right, ladies and gentlemen, let us follow this up with another stream next week, and I will be obviously in the channel and in the. When did I buy ENPH? There is no ENPH on there. What are you looking at? Cool, dude. Are you confused? Am I blind or is there ENPH on my portfolio update? Am I losing my mind? It's not on there. I don't own an ENPH, so I don't understand that question. Anyway, okay. We'll see you guys with a follow-up workshop next week, whenever it is. Again, they're not always on the same day. Whenever I can figure it out. All right. Peace, guys. Take it easy. I'll upload the workshop recording when it's ready.